General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Let's go. Let's go. Okay. Tuesday CPI is done. I hope we're recording sound. I had to go get my coffee. Let's see. Forex Factory. Oh, I need my screen grabber. That's the only thing I didn't have ready. Oh, just another reason to drink some coffee. Okay. Tomorrow, CPI, it's okay. I think Trump said something like interest rates would be less than 1% or something like that. Tomorrow's PPI. It's important not as important, but it's good enough for continuation. This red folder should be respected, but CPI kind of really sets the tone. Let's look at the CME Fed Watch. Okay, 97%. That's pretty much locked in. 55% chance for ease. I'm gonna have to start watching this now. So this is boring. Not interested in it. So it's getting a small box. Same old story here. No rate cut. Let's go here though. Okay, we're at 55%. We got 55% for the cut. And what's that, 17? Or I should say 17th of September. This is turning into a cruel game. The data is good. Good enough not to cut rates. So nothing is moving the sentiment. I won't even say September is the cut until mid-August. Because these things shift kind of in a way where you can feel what's going to happen next. And keeping track of these things is learning. Earnings. I don't think the good earnings is until Thursday. Tomorrow's Wednesday. Let's go here. Netflix is Thursday. So end of day city is Wednesday. ASML's tomorrow. Goldman Sachs, Progressive. Wrong button. No, I haven't heard any headlines about banks. What are they pushing? Trump's approval rating, Bitcoin. They want to sell MicroStrategy and Bitcoin at an all-time high. Mm, Media cycle is focused on Trump approval rating. I'll look into banks later. Let me knock out my chart work. Dollar on the daily. Okay, we got what I was looking for. Alright, so now it's like, alright, you can stop now. CPI. PPI got me looking at this easily. We closed here, we opened here. So this is really the array. Because closed here, opened here. You know, let's go to the old. Here we go. Classic. Can't go wrong with that. The volume imbalance. After that, it's this high. But now I'm comfortable with looking for swing trades. We just pushed in comfortable. Retracement area. Dollar. So assets like gold, EU, etc. We should be able to stock loans. Comfortable gold. Let me put some respect on EU. You know, etc. Get a dot. Today, target hit. Choppy and ugly. Target hit. Choppy and ugly. I don't like that top. I don't like that bar formation at the top. It looked like accumulation, and both sides need to be ran. Let's see if we get something on the weekly. I think it was all-time high. Not I think, I'm pretty sure it was. Yeah. How is this bar holding up? And do we feel like we can get TP1 on the weekly? I don't think so. maybe here first. Hold up. Then here. Why is it so big here though? This is 12. This is 10. Okay. So let's go like this. 12. 12. We're not closing above here right now, which is like point of interest for me. Let's give me a little bit lighter. Really just here alone. Nah, below, just in case I don't have it somewhere else. But TP1 is still a good target, but maybe here first. Fresh, untapped, fair value gap under a low. This is perfect area to buy from. This is retracement June low, other stuff. Diabolical evil. Long-term sale ideas. But for now, sale ideas look relevant. The main thing here is we took out outside liquidity. Simple ideas will be previous week's low. Tomorrow's Wednesday, Thursday, Friday. Like, now the question is, what case can we make that how the week is put in? Did it happen during news? $30 minutes. Here we go. It did. It happened during news. It happened during CPI. I mean, that's almost as good as it gets. Daily. Let's see. Okay, CPI candle is a nice strong wick. This is a line here, so we don't need this over here. No. Which one of these candles is previous week's low? Let's go here and let's make this yellow. Should I make it green? What is a target color? Like there is no universal target color. Well, yeah, green could be because it's like a TP color. All right, this is previous week's low here. Yeah, that does make sense. Untapped low. It's previous week's low. Yeah, it's the only important low here. Previous week's low is the only important low here. The level is 22,780.25. It's the target for the week now. Invalidation point would be closing above, what's today? Tuesday's high. Let's see what the H4 looking like. What's in our way? Okay, everything in our way doesn't matter. This real high, like we don't need that no more. We do have previous weeks. These levels can stay. This, I think this was like a H1 level. Highest candle in the range. Yeah, keep this here. Then I had lowest candle in the range here. From this swing, really from this swing to this swing. Lowest candle in the range was here. This lowest down candle. We swept it, but we came back up. We respected it. Current of a low. Just in case we play this range. This is still the target of all targets, but just in case we play this range, we'll move this too, because this is the new label. All right. We're on the H4 time frame. We'll still keep this. This is going to be the key level we keep here. This old target, I'm going to keep this. It's not a target no more. It's an old projection. We'll keep it because see, it was respected. It's an invisible all-time high level, and we're going to respect it. It's a fib. There ain't no real PDL rate. We can match it with the old high, but what's the point in doing that when I guess keep it algorithmic. Let's do old high. What is the highest high here? Let's do that. That was the last time this candle took this candle's high, just to make sure. This price point is 23,173. This candle opened at 23,174. So this candle did close through that open price. So this is the arrow here. Okay. And below this, what can I key up off of here? This candle. This should be the key level here. Let's make it pink. That would kind of be like line in the sand. I wouldn't want to see that. I would want to see maybe OTE or something. OTE is kind of suspect right now. Hold on. This is discount. So let me do discount to 7.9. This is 618 right here. Let's do this. I'm gonna make a box for this zone. The low is 23,178. So this low needs to be 23. I don't know if this is gonna work. We're gonna see. Let me go to the other one. Let's go 23,170.50. 23,170.50 here. 23,127.75 here. All right, that's the golden ratio. So take this off. Let's take off this border. Let's pick a different color. I guess orange is the closest thing to gold. This looks kind of gold. This kind of gold too. I don't know why they don't have just a gold text inside. Golden. I'm gonna put an alert here at previous week's high. See, put a retest previous week's high. That'll still have me in line for that. The target's here though. Let me take this off. No extra targets this week. Just from here to here. It's not really that far. But the delivery from here to here still can be something cool. PPI should set us up, or London. It's options expiry week. Okay, selling retracements is the plan. The ideal location would be get a CSD above old previous week's high. But I'm thinking it could be a fast move. And London 2 to 4 might be good enough. And we move fast to target. Okay, that's the golden zone still from the other one. We do got this little wick here. It's interesting. Like if I had to set a limit, it would be at this wick. Stop would be at the high. And target would be right here. That's if I had to set a limit. And I would feel comfortable with it on PPI. I might set this limit on Forex just because it's Forex. But that's the idea. And I think we can do it in a day. I think we can do it in PPI. Push up, lure the buyers back in, all time high, push down. Respect this H4 order block. Is this the low? I should have got the open price. Let me get the open price of this. And the top right will work it. It don't matter. You know, and it looked like 50% of this. Good thing I put the lines in correct. Okay, it's almost 50%, but yeah, that's the best possible price. Oh, don't do that. Alright, so alert is already here. Low resistance liquidity run. There's a lot of stuff working for us. I should have like presets for this stuff, but I'll do it and then end up deleting all the presets because I'll be OCD with my charts and my journal and how I back test. Two 780 0.25. One band, one sound. 1 day, 2 day. Alert set. Previous view high for the retest. Nevertheless, it might be a shallow retracement and fast sell. So don't wait on it. Wait on kill zone and accept risk. My order flow is on your side. Boom. Y'all don't talk to yourself in y'all journal. Alright. Did I put wait for London? Yeah, wait on kill zone. That's the same thing. Alright, that's that on that. Y'all have a good day. Peace.